Welcome back. So in this video, we're going to talk about two sources of equity funding. The next video will be about IPOs, so that's why it's not in this video. But we're going to talk about business angels and venture capitalists, or venture capital groups. So a business angel is, just like it sounds, it's an angel who invests in businesses. Duh. No, it's an individual that is willing to invest their personal money into startups. Normally they are experienced entrepreneurs who have kind of reached the pinnacle of their career. Maybe they have some free time to invest in other ventures. They may be a very successful entrepreneur who sold their company, and this is a way for them to get in on the next big thing. A lot of them also do it for just psychic income. This is a way for them to mentor young entrepreneurs. And when I say young entrepreneurs, I don't mean a young person like 18 to 24 years old. I mean new ventures, people that are just getting started in the entrepreneurial process, right? So this is a way for them to mentor young entrepreneurs, a way to remain relevant, and possibly to invest in the next big thing. Now, business angels are different from venture capital funds because they invest much smaller amounts of money, usually within the $10,000 to $500,000 range. Okay. They normally are looking for companies that return 30 to 40% a year. That's about the range. Business angels can be difficult to find. Although supposedly there are about 65,000 individuals who made business angel type investments last year, it's still hard to find them. I do have in my concluding video, I'll give some references to where you can find some business angels. But again, it's a little bit hard to find. Usually they're going to approach you. Maybe you're working with an incubator or an accelerator, and you might meet some business angels that way, or you do a business pitch competition where you might meet a business angel. If you're not sure what the difference is between an incubator and an accelerator, don't worry. That's another playlist that I'll talk about that in a little bit more depth. Okay, so let's look at venture capitalists. Venture capitalists, unlike business angels, are not individual investors. These are groups of investors. Okay, so it's people that are pooling money together. It could be private capital firms, it could be university endowments. There's all sorts of different kinds of people that put their money into these venture capital funds. And people that actually invest in a venture capital fund are called limited partners, whereas the people running the fund are called general partners. Just to give you that terminology. There are roughly slightly under 1,000 venture capital firms in the U.S., and Europe is actually quickly gaining parity with the United States with regards to its number of venture capital firms. The thing about venture capitalists that I think a lot of people get frustrated with, you as an entrepreneur are going to give your pitch to the venture capital group, and if you don't know how to do a business pitch, check out my playlist on it. But you're going to be giving these pitches to these venture capital groups, and you may give pitches to dozens and dozens and dozens of these venture capital groups, and they're all going to be they may all be turning you down. Don't get frustrated. In fact, I actually say this. There's an expression in French called "Le premier c'est pour les chiens." The first one, it's for the dogs. So as you get your list together, I would actually pitch the ones you think that you're going to have the least success or least compatibility with first, so that you can learn through the process. Okay. A lot of venture capital firms also specialize in one or more industries, so you want to make sure that your industry is a good fit. I consulted for a co-working space that had a pitch competition, and I was one of the judges on there, and another one of the judges was a gentleman who was with the venture capital firm that started Hulu. So this guy really knew a lot about technology and things like that. That was really his bread and butter. And there'd be a lot of these people giving these pitch ideas about, trucking and agriculture and real estate and all this other kind of stuff. And the guy was really nice about it, by the way. And he'd say, well, this may sound like a good idea, but I'm not qualified to judge it, so therefore I can't fund this. Understandable. I mean, if you know technology, why would you invest in trucking? Find a venture capital group that invests in trucking. And there are venture capital groups that work with almost every kind of industry. In fact, I consulted with a guy in LA who had a really, really good restaurant in downtown LA, and he had another one in Santa Monica, and he wanted to open his first location actually in Inglewood. But he didn't have the money to do it. So he worked with we helped him locate a venture capital group that specialized in funding restaurants. Now, whenever you sell equity into your firm, I would advise you against just taking money for equity. The venture capital group or the business angel should be able to offer something in return besides just the money. So like my buddy that worked with the restaurant, when He hooked up with this venture capital group. They gave him the money to open that third location in exchange for equity. However, what they also did, because they specialized in restaurants, they helped him with IT, with his website and stuff, because they're partners now. Remember, your profit is their profit. So they helped him with his IT, helped him get his website up. And they also had access to a really heavily discounted restaurant supply chain. So he was able to get cheaper lettuce, cheaper fish, cheaper meat, all that other stuff because he partnered with them. So this was a partnership that was much more than here's some money now, you owe us something. They actually became, I don't want to use the word equal, but they were actually in this together. That's something that you want to look for, okay, in a venture capital firm. Yeah. So that's kind of the basics about venture capital. The only other thing I would add is that they usually talk about funding comes in stages. Like there might be the seed level funding, stage 1, stage 2, etc. Like let's say you need $250,000. They may not give you $250,000 up front, but they may do like the first round is $50,000. You know, you meet some certain milestones, and then they give you $100,000. You meet some milestones, and then they give you $100,000 again. If you're interested in more of this, check out my playlist on this very subject. That's also on my YouTube channel. So this kind of wraps up the very basics of business angels and venture capital. In the next playlist, we're going to talk about IPOs. Hope you enjoyed this video. As always, give me a like. That's a thumbs up. Make sure you comment down below, and make sure you subscribe. See you next time.